So I'm excited to talk about the RSI2 method that I use in my trading. And we're going to take a look at 3 different stocks. I'm going to show you why I selected them, what I use to select when to buy in, and how do I know when it's time to get out. And for those 3 stocks we'll take a look at will be Allstate, Hilton, and S&P 500. Hello my friends, this is Legend. So I'm excited to talk about the RSI2 method. I love this method. There are quite a few little criteria that it does have to meet, but overall it's been pretty profitable for me. So before we get started, if you don't mind, hit that like button as it does help the channel out. And we're going to start right off with Allstate, ticker ALL. So the first thing that I'm going to look at is the 1-year chart. And we're already looking at that 1-year chart. And what I'm looking for is that moving average, or that MA200, to be going up and to the right. I want that line to move up and to the right. And then I want those candles, for the most part, to stay above that MA200. Now you can see it did dip down below it, but it did recover, right? It didn't stay down here for months and months and then all of a sudden peek its head back up above that 200. So I'm looking for that, and if it does check off on that, and it does for Allstate here, then I'm going to move over to the 5-year chart. And this is the 5-year chart, and you can see that red line again is that MA200 going up and to the right, and the candles staying above that MA200. So it checks off on both those, and now we can look to see if it's time to actually buy into Allstate. So I'll flip it back to that 1-year chart, and that 1-year chart actually uses the day interval. And that's what I'm looking at, is the day interval. So we'll zoom in right here to the end of the candles, right up to the current day. And as you can see, as far as the current day goes, we are starting to move up. So the first thing that I want to look at is the RSI2 and then the Bollinger Band. So let's go ahead and turn on that Bollinger Band. And I'm going to turn off the moving average, and I'm going to turn on the Bollinger Band. And what I'm looking for is the candle to be on the bottom half of that Bollinger Band. And as you can see, it still is under that midpoint of the Bollinger Band. But where is the RSI2? That yellow line right here is the RSI2, and it's currently at 92.5. So I am looking for that to be under 10. That's definitely not under 10, right? So it is not a current buy point for me. But if you just move back a few days, and it just happens to be when I did buy into Allstate, and I alerted my Discord members of when I did get in, and if you want those alerts, you're welcome to join my Discord. The link will be in the pinned comments and down in the description below, where I do notify them when I do make my purchases and at what those price points are. So now let's just take a look at the RSI2 and the Bollinger Band here. And if we're looking at the RSI2, you can see that's a 15, so that's not below 10. This is an 8.79, so now we're below 10. If we slide right up to that candle on the Bollinger Band, it's not on the bottom half of that Bollinger Band. So that is still too early for a buy point. I want it at the bottom half of that Bollinger Band. How about the next day? It's under that 10 on the RSI2, sitting at 7.18. But again, it is still above that midpoint. So that one is not a purchase time for me either. Now granted, all of this is just my opinion, and I'm showing how I'm making my purchases. You have to make your own decisions and come up with your own ways to purchase at what buy points and what you're most comfortable with if you're looking to buy into any of these stocks. But do not use anything that I'm saying as financial advice, because I am not a financial advisor and none of this is financial advice. This is only for entertainment. But as you can see, even though that RSI2 is under 10, that candle is still above the midpoint. So let's move over to the next day. This one here did close under that midpoint, and the RSI2 is under the 10. So this could be a potential buy, but it is still running through that midpoint. I prefer that candle to be opened and closed under that midpoint of the Bollinger Band. So since this did run through it, I'm going to hold off and see if the next day it opens and closes under that midpoint. And the next day you can see that it did. It opened and closed under that midpoint of the Bollinger Band. So this one's looking good. How about the RSI2? It's definitely below 10. It's at 0.51. So we're going to take that closing price right there of 202.27. And we're going to take that as our first purchase, okay? And move on to the next day. And the next day, we did not get a green candle. We actually got another red candle. And it actually went below the Bollinger Band. So, wow, great, all right, in my opinion. And that RSI2 is at 0.34. Definitely under 10. So that to me would be my second purchase. And that purchase would be at that close of 20.87. And I'm going to assume that I'm making the same number of share purchases for each of these purchase price points, just to help to make the average of that stock to be a little easier to calculate. And moving on to the next day, we got a little green candle right here, but it is still at the bottom of that Bollinger Band. It is still under that 10 on the RSI2. So I'm going to go ahead and make a purchase. Now I prefer it to be a red candle, but you can see even though it is a green, it is just a sliver of green, okay? It probably just barely popped up just before market close, right? So I am not taking that as necessarily a move up, and the fact that it is still on the bottom of that Bollinger Band and under the 10 on the RSI2, I'm going to make that purchase at that closing of 201.05. And moving on to the next day, boom, we are still down at the bottom of that Bollinger Band, but that RSI2 is now 18.21. Now that is where some of this gray area comes in. Do you go ahead and purchase those shares at that point because it is pretty much right there at your average? Or do you hold off and wait to see if the next day is going to give you a red candle to possibly give you a better buy point? That is up to you, as each time it can be a little different, and depending on what your average is if it makes sense to buy that price point or not. So moving on to the next day, we get a nice pop up, right? Huge green candle, and that RSI2 is definitely above 10, right? So at this point, since we've moved up and we're definitely above our average, I just drew a line in here at 201.39. That is our average of those three purchases. Those three purchases being at 202.27, 200.87, and 201.05. That average comes up to be 201.39. So this green candle is above that. So let's just go ahead and we're looking for our exit point now. So to do that, we're going to turn off our Bollinger Band and we're going to turn on the moving average. And what I'm looking for on the moving average is the MA5. That's this green line right here, okay? So that purple line is our purchase. The green line I want to use as my exit point. So since we did close here at 206.82, that's a very nice pop up, right? There's a good bit of space between that MA5 and the top of that candle. So what am I going to do? I am going to set my stop right here at the lowest point that is still above my purchase price. And that point is the MA5 at 202.35. So by setting that stop limit at that 202.35, and yes, I use a stop limit, not a stop loss. There's a difference. The stop loss is you set it at a certain price and anything below that it will sell at, right? If it drops below that point, it will go to market and sell for whatever the market price is once it's triggered by your stop loss price. A stop limit means I am only willing to sell it within this range. And for a stop limit, I normally like to keep it within about 5 cents. So I give it about a 5 cents range. So for this example, setting a stop limit, I would set that stop at 202.35, and the limit side, I would set it at 202.30. So therefore, if the price is at any point in that range, it will sell in that range. That 202.35 will trigger that stop. And since I have a limit, I am not willing to sell them anything below 202.30. And that means if the market drops fast, it could shoot right through it and it won't sell. It'll trigger the 202.35, but if it doesn't sell between the 0.35 and the 0.30, then it will not sell and it'll just stay open. So you can probably see that there are some advantages and disadvantages of having a stop loss versus a stop limit and vice versa. But with this candle moving up, it has a huge gap between that MA5 and the top of that candle. So I'm just going to slap it in right there at that 202.35. And then the next day, we have another move up, even though it did pull back a little bit. So what am I going to do? I normally would stay right where I'm at because it's a red candle. But there is a huge gap between the bottom of that wick right there and to the point of the MA5. So what I would do is I would take this point and I would move it in 1 to 2 places here. Either move it up one spot to 202.44, or since there is such a big gap here, go ahead and put it right underneath that candle and set it at 203.42. And because of that huge gap that I'm seeing between the bottom of that wick and that MA5, that's what I would do. I would put it right there, lock it in at 203.42 and do a stop limit just like we did last time. Have about a 5 cents difference, but that would lock in my profit at around that 203.42. And since I did buy it at 201.39, we're looking at about a $2 gain so far. And you've only had it for a few days. So not too bad for that, right? And as this moves on up, I just move with that MA5. I normally keep it 1 day before the current candle. But like I said, because of this gap, I'm going to go ahead and put it on that current candle, right? And that's the reason it's sitting right here. Now, come Monday, if we get a red candle, I'm not moving it up anymore. I'm going to set it right there and just hold and wait. If we get a green candle, I may move it right underneath that candle. But if it's trading sideways, I'm probably just going to stay right here, and then I'm going to stay at basically one candle before the current day. So I am currently in this one, and that is where I have my stop limit at. And that's at that 203.42. So for another example, we'll take a look at HLT. And here on HLT, you can see that the RSI is high currently, but it did dip down earlier. So let's just go ahead and take a look at that, and let's see if it's a stock, first of all, that I would want to actually be in. And the first thing I would check out is that 1 year chart. And here we go. We're looking at that 1 year chart with the MA200, which is that red line. It's going up and to the right. The candles are staying above it, except for that same time period of that event. So again, I'm going to give that area a pass. So the 1 year chart looks good. And how about the 5 year chart? It looks beautiful. Staying above that 200, and that 200 is moving up and to the right. So it does pass both of those checks. So now we're looking at that day chart again, and I have zoomed in to this area here where we were showing that RSI 2 was below 10. So let's go ahead and let's turn off the moving average, and let's turn on that Bollinger Band. So the first point that it actually dropped below the 10 on that RSI 2 was right here. And you can see it's sitting right there on that line. So we're going to pass on this one, as I do not necessarily want that candle to go through the midpoint of that Bollinger Band. I would much rather it open and close under that Bollinger Band at least. I prefer it to be at the bottom, but if it does go and it's at least on that bottom half of that Bollinger Band, then that could be a potential buy. And of course, that RSI 2 would have to be below 10 at that point. So for this candle and this buy point, I would pass. But this one is under that midpoint of that Bollinger Band. It did open and close under it, and the RSI 2 is below 10. So for this one, that could be a potential buy. And that would be at a price, and that's the closing price of $272.25. And moving to the next day, we have another candle under that midpoint, and it is under the 10 on the RSI 2. So that could be another potential buy point, and that would be at $269.82. And moving to the next day, it drops yet again, and it's still under that 10 on the RSI 2, and that closing price is $269.25. And moving to the next day, we get a green candle moving up. Now, we don't know if it's going to move on up or is it going to come on back down. So for this candle, we're going to see if we can potentially go ahead and set an exit point. But to do that, we need to know what that average is of those purchases. And I've already drawn a line right here at 270.44, and that is the average of this purchase, and this purchase, okay? So that average being at 270.44. So let's go ahead and turn on the moving average, and let's turn off the Bollinger Band because we are looking for our exit point as the candle is moving up above that average that we have of our purchases. Now this candle here is running through that line and pretty much sitting right there on it. And our exit point that we're looking for is that MA5, and that's that green line. So if I zoom in a little bit more, you can see that that green line and the top of that candle is pretty much the same spot. So I'm just going to hold off right now because I don't know if the next day is going to come down and give me another buy point, or is it going to move up and we can start setting our stops to get out. And the next candle, as you can see, it did have a nice move up. Now this one here moved up a good bit, and it's sitting at a close of 278.18. And with our average at 270, I want to go ahead and set in a stop limit order. And where do I set that stop limit? That would be at the low part right here. I'm going to go ahead and set it right there. And that number would be 271.20, and that's the point of the MA5. Now, this is a bit of a risk here because this candle is quite large, but it did run through the point of where I'm setting my stop. So it is very possible that I could get stopped out at this point because it will probably open around this point where it closed, and it could come down, kick me out, and then maybe take off or break on down. But I don't necessarily want to lose out on this huge pop. I'll go ahead and set my stop limit at this point of the MA5. So that would be a 271.20. And with my purchase of 270.44, that's roughly about a $1 gain that I'm locking in if it does kick me out. So with that close of the candle right here, I have that stop set here just in case if it does come down, it'll kick me out. But if not, then we can continue on. So the next day, we get a nice little jump up. Now, granted, it is a thin sliver of a green candle here, but it did have a nice jump in that price between those 2 days. So what do? Well, I can do one of two things right here because my stop is sitting right here at the bottom. I could keep with the idea of following that MA5 and being one candle behind, okay? I could move it to this spot right here, and that would be 272.15. Or the fact that there is so much of a gap right here between the bottom of this candle to the MA5, I could go ahead and pop it up to right here and set that at 273.74. Now that's a decision that you would have to make, right? And this is another one of those gray areas where you have to decide, do you want to stay back here, give it a little extra room, or do you want to go ahead and move it right underneath this candle because there is so much of a gap? And for me, I would put it right here at the end, right underneath that current candle, only because the low of that candle is 279.50 and the MA5 is 273.74. It did not come down that far during that day, and that is still a very nice buffer. So for this one, I would be setting at about the 273.74 stop limit, owning them at 270.44. I have the possibility of locking in a $3 gain, and I've only had it for a few days. That's not too bad, right? And then if we get another pop up, then I'll possibly move it right underneath that candle as well. Now, if we get a little bit of a trading sideways or even a down candle, then I will probably stay right where I'm at and go back to staying about one candle behind. And there are times where you'll stay more than one candle behind, because if it's trading sideways or going down, I'm not going to move. I'm going to stay right where I'm at. But if we get that pop up, I'm going to move it on up right along with it. So for this one, I've showed where I could have an average of about 270.44, and I could have a stop limit at around that 273.74. Not too bad at all. And the third one I want to take a look at is SPY. All right, so here we are on SPY. And again, the first thing I start off with is the 1 year chart. And here we are on the 1 year chart. I want to see if that red line, which is the MA200, does it move up and to the right? And it does. And of course, do those candles stay above that MA200 for the most part? And they do, except for that same event that we've seen on all the other ones. So again, I'm giving that spot a pass. Outside of that, it has been moving up and to the right for the 1 year chart. Now let's check out the 5 year chart and look at that. That's beautiful. 5 year chart, the MA200 moving up and to the right, and the candles are staying above. So the next step is we'll zoom in right here on these candles, and this is the day chart now. We're looking at the day interval, and I want to look at the Bollinger Band. So let's turn off the moving averages and let's turn on the Bollinger Band. And you can see we are coming down on that RSI too, and it is getting close to getting below 10, but it is still above that midpoint of the Bollinger Band. We're on the top half. So at this point, that is not a good buy point for me. So I need it to be at least under the midpoint, and I need that RSI 2 under 10. So let's just kind of scroll back, and you can see right here, we did drop below 10 at this point. This day was at 14.3, so that's not low enough. How about the next day? That one is at 509 on the RSI 2. So that could be a potential buy if it's under the midpoint of the Bollinger Band. And we scroll up, and yes, it is. It is actually toward the bottom of that Bollinger Band, which I do like. So that closing price is $665.67. And then we have another day, it's under 10 on the RSI 2, and it's at the bottom of the Bollinger Band here as well. So that closing price being $660.08. So there's two purchases right there. And then how about a third purchase? Can we do a third purchase right here? We are at the bottom of the Bollinger Band, so that looks good, but that RSI 2 is above the 10. Now, that's a call on your side for that. You would have to find out, well, what's the average that you're at currently? And we can figure that out right here just simply by adding the 2 and then divided by 2. So that's 665.67 plus 660.08 equals 1,300 divided by 2. And that gives us 662.88. And we'll draw our line, and we'll put it at 662.88. And there we go. So that right there, that line is our average. And the candle in question is this day right here, is what we're talking about. Is that worth a purchase? Even though it's above the 10 on the RSI 2, but it is at the bottom of the Bollinger Band. Is it worth a purchase? If we zoom in, you can see it closes pretty much right there on our average. So it's really not going to bring down your average, but it doesn't look like it's actually going to raise it either. So that's just a call on your end. If you want to make another purchase, you could do that just because it is toward the bottom of that Bollinger Band. But I'm going to stick with my rules, and I'm going to say, since it is above the 10 on the RSI2, I'm going to pass. So I only have these two purchases with this purple line as my average. Now, the next day, we do have this big red candle, but it did open all the way up here at 672.91. That's almost a $10 move right there. 672.91 is a nice, huge pop up. Now, if you were watching the candles and you saw that huge pop up, you may want to go ahead and set a stop just for protection. With that huge pop up, you see that $10 move. So let's just say that we did that, right? You saw that big $10 jump up overnight, right? Because it closed on this candle, it closed at 662, and this candle, it opened at 672. So a $10 pop up overnight, you may want to just go ahead and just drop in a stop limit order and set it for, say, like $5, right? In the middle, something in the middle. So if you had them at 662 and it opened at 672, then let's just say that we drop in a stop at about 667 or 668, something like that, right? Because we don't necessarily want to lose that huge pop-up, but if this thing's going to continue moving on up, we also don't want to get stopped out. So if it does drop that roughly $5 worth, it's going to kick us out. So if we did throw a stop in here, and we threw that stop in there at roughly, say, $5 gain, as this price is coming down, boom, triggers us. It kicks us out. We pocket a $5 gain, and it's still coming down, right? Well, as it's coming down, it kicks us out, but what does it do all the way until the end of the day? Well, at the end of the day, it closes at 652.53. So it closes way below where we were even at. Now, we took our profit and we made $5 right here. And now, by the end of the day, it's dropped all the way down to 652.53. So it's at the bottom of the Bollinger Band. And look at that RSI2. It's under 10. So guess what we're going to do? We're going to purchase again. So we had two purchases. We saw that huge $10 move overnight, and we set our stop to make that $5 move. We get paid that $5 per share for that gain. And then at the end of the day, we get to buy it again, and we make a purchase at 652.53. Okay, so now that's our new purchase. And that puts us all the way down there. Now we're waiting for the next day to see, is it going to give us another buy point or a possible green candle? And we'll look to set another stop. Okay, so that's the first one right there. We just made $5 right there. Now we own it at this point, and we're looking for the next day. And you can see that next day we get a green candle moving up. So what do? We're going to flip it over to the moving averages, and let's see where that MA5 sets. And here we are on the MA5. Well, that move up is still under that MA5, so we're not going to set a stop yet. But look at that next day. We get a pop up, right? Now we are green because it is above our MA5. So what we do is we'll set our stop right there on that green line for the candle before the current candle. And that sets that stop at 659.99. Now remember, we now own those shares at 652.53, right? And we're setting our stop now at 659.99. We're looking at another $7 gain. Now remember, this has only been for a few days. So we've got that set right there. And if it gets triggered, that's a $7 win in our pocket. So I'll take that if it does kick me out. So that's where this candle is. So the next day, what do we get? Another move up. What am I going to do? Well, my stop is currently here. So I move it to right here at a 660.60. And as you can see, it just keeps moving up, keeps moving up. Well, right here off this candle, I've moved it up to this point. So we're currently sitting right here at the 667. The next day, we get a green candle, but it is a little lower. And it's getting close to that MA5. And I'm sitting way back here. Now the decision is, do I move it up or do I stay? Well, that again is a individual's decision. But for me, I'm going to look to see what that stop would be if I did move it up. Well, that would put it at about 673. This candle here went as low as 678. So setting at 673, I'm okay with that. So I move it to right there and I set it at 673.17. Next day, we have a red candle. All right, well, on a red candle, that's a possibility that it could be coming down a little bit. So I'm going to stay right where I'm at. And then we get a green candle. Now, this is where it really kind of gets a little difficult to really say what I would do, right? Because it's right on the line of the MA5. I'm setting back here at a stop. Because it's on that line, I am probably going to sit right here and wait, okay? Because then you can see now we got a red candle. It's still a nice distance between this point and all the way up here. But since it is still riding that line, I just don't feel comfortable in moving quite yet. But on this day, we do get a green candle. It's not a big green candle, but it is above that MA5. So what would I do? Now I feel a little bit better in moving it up because first of all, that low point of that candle is 684 and I'm sitting at 673. So now there's a huge gap between the bottom of that candle and where my stop is. So I'm going to move this on up. Now I'm probably not going to move it up to that candle right before, right? Because that is just too close. I would probably be setting maybe 2 candles back, right? Give it a little bit more room. And if I even felt that was too close, maybe I'll move it just to right here and set it at 279.98. But if I did move it here, it would be at 681.75. And the bottom of that candle, that would be our current candle, is 684.58. So this one here at 681 might be a little too close. So I would probably be sitting right here at 679.98. So sliding on over, I'm sitting at 679.98 and we are at this candle right here. Now, since this looks like it's trading sideways, the question is, does it break below this point of 679.98? So let's move our stop line here up to that point. Okay, so I drew this line here in and I cleaned it up a little bit. So that purple line right there is the 679.98 and that's where we're sitting back here. Since it's trading sideways, we're sitting and waiting because we would like for this to actually take back off and then we can really do a jump up on that MA5 and hopefully start capturing more price appreciation. So we're sitting back here. This is trading sideways. We are staying right where we're at. And it looks like on this candle right here, which is actually the current candle, went as low as 679.17. Okay. And we had it at 679.98. So this candle here, and that would be the current candle, actually kicked us out. So we would have got kicked out on that last day at that price of 679.98. Okay, so we got kicked out at that point and we got in down here at the bottom of this candle, right? And we've been moving up on this MA5. So that difference of 679.98 minus 652.53. 652.53. That's going to equal $27.45. Now don't forget, we made that $5 gain right over here by putting our stop because of that huge $10 jump up overnight. So we made 27 bucks here and $5 here, and we add those together and we made $32.45 move just over this period right here. Got in right here got kicked out right here and did 2 rounds on this, right? Our first round here and our second round was a little longer, but it made us $32 in price appreciation on SPY. So I just wanted to show you, as doing these trades are a lot of fun. And if the stock is something that's moving up and to the right for the majority of the time, even if you do get it wrong, over time you will recover if it continues doing what the history of that stock has been showing. Now granted, anything can change and nothing is guaranteed, but when you're looking at a 5-year chart like this, or like this, or like this, right? To me, it says, even if I get it wrong, I may have to hold it for a while, but eventually I'll be able to recoup. But as you can see, off of those 3 trades right there, we made some good money. So if you'd like to see whenever I make my trades, I do post those in my Discord for all my members to see. I put in my buy prices. I also notify of the stop prices that I set. And when those trades fill, I do put that in there as well. So if you're curious of what I'm in, which stocks I'm trading, when I get in, and when I'm looking to get out, join the Discord. The link would be in the pinned comments and in the description below. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button. It'd be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.